Good morning, everyone, and thank you for joining our virtual roundtable. My name is Justin Pelham, and I'm the Communication Specialist with the Muskegon Lakeshore Chamber of Commerce, and I'm the facilitator of this morning's meeting. We'd first like to thank our sponsor, Shepherd Shoreline Gutters and Garage Doors, for this meeting. This morning, our presenters will be Jarred Hibma, CPA of H&S Companies PC, and Amy Lebednick, Business Solution Manager from West Michigan Works. Um, we can start with a few housekeeping items first. During this morning's presentation, we ask that everyone mutes their mics. For those on the PC, at the bottom of your Zoom screen, you'll see a participant's icon. Click on the icon and it will open up a sidebar on your screen. At the bottom is a raise hand button. Please use this if you have a question, and we will get to it during the question and answer segment of this meeting. For those on mobile, please unmute yourself or use the raise hand button, and we will get to you during the question and answer section. So with that, we will start with Jarred. Can you discuss what federal programs are available, including the Paycheck Protection Program?
Yes, of course. Obviously we want to cover what are the business's main options within the CARES Act. And I'm going to share my screen right now for those who can see or viewing on their computer. And so the main two programs within the CARES Act is the Paycheck Protection Program and as well as Employee Retention Tax Credit. The one thing to note about these two programs is that you choose one or the other. You can't choose both. So you really got to analyze which option is best for your company, and we're going to go over that. I have a couple examples. We also have a template that we set up here at H&S that I think will really give insight into how these calculations work and allow you to kind of better analyze which one's going to be better for your company moving forward. A couple of things to note that on the Paycheck Protection Program, there are limitations. If you have 500 employees or you're an affiliation where you own 50% or more of affiliated companies in combined total that have 500 employees, you may be limited and not be eligible for the Paycheck Protection Program. So you will want to look into that. On the application, you have to make sure that you're eligible to certify that the current economic conditions makes the loan necessary to keep supporting ongoing operations. That's a big one to make sure that that is true, which many it is applicable. And obviously acknowledge that the funds will be used for the allowable expenses, which is payroll, interest on debts, rents, utilities. And then there's also the employee retention credit. For many of you, you are either fully or partially shut down due to government mandate, and that therefore makes you qualified. A good example are restaurants. Restaurants, they are partially shut down because they can still do takeout, but they are not fully operational because obviously they can't do dine-in, so therefore they would qualify. Employers are able to recoup up to 50% of wages on the first 10,000 wages per employee that are in a qualifying quarter. The max is obviously 10,000 per employee, so if you can think about it, it's a 5,000 credit per employee. The Paycheck Protection Program, the amount that you can get for a loan, it is based off of 2.5 months of average payroll. A lot of people have been taking 2019 payroll to make this determination. You can include things like employer cost of health insurance, employer cost of retirement plans, and you can include that as part of your calculation. You can even include your state unemployment as well. There are no personal guarantees on this loan. It's guaranteed by the federal government. And at the end of the loan, if you do not get full forgiveness at the end of the loan becomes a 2-year loan with 1% interest. On the employee retention tax credit, those are wages paid from starting 3/13 and all the way through 12/31, and it's only for qualifying quarters. Again, we'll go over that a little bit more in my template that I have set up. If you are an employer with less than 100, all employees count. If you have more than 100, there are other limitations there that you have to follow. And then we'll go into our template. So what we tried to do is just kind of really analyze the two programs, the Paycheck Protection Program versus the employee retention tax credit to really determine which program will be best for you, not only in terms of loan proceeds, but also in terms of loan forgiveness in comparison to how much of a credit you will get in terms of the payroll that you pay out. For the Paycheck Protection Program, we first look at the eligibility. If you're under the 500 employees, in this case, they only have 12 employees, so therefore they qualify. This employer says, yes, he can certify that he needs the loan to continue operations. We then take our total payroll cost. We take the annual payroll for 2019. Do note that any employee that makes over $100,000, you're capped on $100,000 of that employee's wages. So therefore, if that employee makes $150,000, you would have to reduce the total payroll by $50,000 to get down to that $100,000 for that employee. In this case, you can include health insurance. I didn't include it here, but you could also include state unemployment and any retirement benefits as well. So in total, his average monthly payroll is about $48,000. He gets 2.5 months of that. That comes down to $120,000, $711 loan that this individual will obtain. So that is what most people are dealing with today with working with banks, determining how much of a loan may I obtain and going through the application of that. Now, when we get to actually receiving the loan proceeds, what we are hearing is that you can apply for the loan, and once you apply for the loan, you can finalize the loan later, and as soon as you receive the funds for the loan, you have 8 weeks from that point forward to use the loan for the allowable expenses, which are payroll, retirement, health insurance, unemployment, and rent. And on the rent, it has to be for any leases incurred before February 15 of 2020, and then also the interest on debt, and that is debt incurred before February 15 of 2020. And the amounts that you pay out over the 8 weeks from when you receive the loan, those are the eligible expenses which you can utilize for loan forgiveness. And in this case, he's only going to be paying out $73,000 of the $120,000 loan, so he's not spending the full amount. Now we get down to the next part, that there are limitations on this loan forgiveness. For example, your average full-time equivalent for last year for February to June 30 of 2019, we have to determine the full-time equivalent employees at that period, or the full-time equivalent employees from January 1st of 2020 to February 29th of 2020. We look at those two figures. In this case, I kept them both 12, but for instance, we can maybe change one to 10, allowing us to use a lower threshold. And in this case, I'm looking at during my cover period, I'm going to only have 8 people hired. Some of them are not working. I'm partially shut down. I'm not fully operational. And so in that case, I'm looking at a loan forgiveness of 20%, which is not going to be forgiven, or 14,000. But they do allow the fact that if you're going to rehire those people by June 30th, and you're going to bring yourself back up to the 10, you're not limited on that loan forgiveness. So that is something to factor when you're looking into this. Let's say, for instance, you really reduced your employee count and you're not able to rehire everybody. Well, you may have paid some payroll. Obviously, this may decrease a little bit, but your loan forgiveness is also going to be reduced. So you have to be careful on that when looking at this to anticipate, am I going to be able to restore some of my employees? So I'm going to bring that back to 0. In this case, we're going to assume that the full forgiveness is $73,000, which is great because every dollar I spent on my loan is able to be forgiven. SBA did come out last week with the limitation that your loan forgiveness has to be, the main portion, it has to be 75% of payroll for the loan forgiveness. So you can only use your rent, your utilities, and your interest. Your loan forgiveness can only make 25% of that, can only make up those 3 things. In this case, we are covered. So therefore, we have a $73,000 loan that's forgiven. We're left with about $47,000 in remainder, and that part is about amount that you can pay back. And I'm going to go quick here because I think I'm running out of time. And going over the employee retention tax credit. This one, you have to, we're looking at the average number of employees for a given quarter. We're looking at what we're going to be paying those employees out. Because what we're looking at is saying, okay, over from April 1st to June 30th, this is a qualifying quarter, whatever wages I pay out, I'm going to get that back 50% as a credit. In this case, we're looking at, for 8 employees, we're looking at a total of about 40,000. If you think about that, the first 10,000 wages per employee at 50% is 5,000 per employee. So therefore that would be 40,000. Now we do look at it maybe even a little bit more detail if we're trying to figure out, okay, is third quarter going to qualify, fourth quarter? In this case, this one would make sense. The Paycheck Protection Program would be best. There are other scenarios, and I'll just quick pull up this one because I think I'm running out of time, where in this case, this person didn't have much in payroll. And they weren't going to have much forgiven versus the amount of employees that they had that they're still working. They really want to look at that they're going to get, probably just as much as a credit, but also do keep in mind that they do have the disaster loan advance that they're looking forward to get. That's going to be about 10,000. Well, if you can include those things together, your total is going to be about 21,000 in total benefits versus 11,000. So that's something to really look at when you're trying to compare these two things and really say, okay, is employee retention tax credit right for me? Or is the Paycheck Protection Program right for me? Those are the main 2 programs within the CARES Act that are geared towards businesses. And this is what we're finding. A lot of people are looking at the Paycheck Protection Program, but they're really missing out on employee retention tax credit and really not analyzing if that's right for them. Now, there are a lot where the Paycheck Protection Program is right, and it's best to move forward, but it's really good to analyze this and look at that. So, and that was the main things I wanted to go over, and I think I hit my time allotted. So I'm assuming we'll have questions later on.
All right, thank you, Jarred. If you could unshare your screen, we'll get back to everything.
Okay, there you go.
All right, perfect. And now on to Amy. Can you discuss the unemployment resources that are available to employees at this time?
Yes, absolutely. I am getting my screen shared here. Can you just verify that you can see my PowerPoint?
Yep, we can see it.
Okay, great. So unemployment insurance, as many of you know, there is information that changes daily surrounding insurance, unemployment insurance benefits. Just to put into perspective, because we get a lot of feedback regarding the inability for employers and claimants to get through to anyone at the unemployment insurance agency. I listed by county the total number of claims over the first 2 weeks, really from March 15th ending through March 28th, the number of claims that had been filed with the unemployment insurance agency. The the total number of claims that were filed for the entire state last year was 399,000. The claims that were filed in the last 2.5 weeks is just under 730,000. So just puts into perspective a little bit just the volume of what UIA is receiving right now. And they are working to bring additional people onto staff. They're paying overtime. They've made some changes to their servers, added some additional technology to try to accommodate the incoming requests. So hopefully we continue to see improvement with that over the next few weeks. The CARES Act, so that was signed in mid-March by the president, and we have waited patiently to get some additional guidance from the DOL. So there was it's called Unemployment Insurance Program Letters. For those that love acronyms, we call those UPLs. They released 2 of these letters over the weekend. So the state has just received that guidance and is working to input that into their own processes to release that out to the public, which will provide some expanded benefits for those that may not currently be eligible or are eligible, and it provides some additional support. So under the CARES Act and the additional guidance that was just sent out by the USDOL, of course, many of you know eligible individuals may be allowed to receive an extra $600 per week. And that will go through July 31st of 2020. This CARE Act also extended unemployment insurance benefits by 13 weeks for a total of 39 weeks. The pandemic unemployment compensation is fully funded by the federal government, and so employers will not be charged for individuals that will be receiving this payment that work for the employer. So as I mentioned, the UIA is instructing individuals to go to their website as they will be posting updates on their website as they're able to get that guidance and applications released. Once they do roll that out, then these payments under the CARE Act, the additional $600 will be made available soon after that. The pandemic unemployment insurance, which is part of that overarching scope of the $600 payment. So it not only expands benefits, but also eligibility. So who is available or who is eligible for the $600 payments? Individuals that are receiving state benefits right now are eligible, and this also includes individuals that have partial unemployment benefits. So those that are working reduced hours under a state program, as well as individuals who may have exhausted benefits. Those that were not previously eligible, as many of you know, the self-employed 1099 contractors, low-wage workers will of course now be eligible as well. These have been circulating around for a while, but what includes this expanded eligibility as it relates to COVID-19 and possibly experiencing a job loss. So I won't go through these line item by line item, and I'm also happy to share this PowerPoint following with those that have attended this webinar. But really, you know, things, if your workplace closed due to an executive order, if you are sick, if a family member is sick, any of these that an employee might qualify for to be placed on or laid off or needs to stay home and receiving unemployment insurance eligibility, this act expands what is available. Okay, so who's not eligible for the $600 payments? Generally, if someone is able to work remotely with pay, then they should continue working. And also those that are receiving paid leave benefits, and this includes both the sick paid leave and the family paid leave that was recently also put out through another federal act. There is an exception to this if an individual is receiving these paid leave benefits for less than his or her normal work week, or if they're teleworking with pay or less hours than what they were working prior to the COVID-19 pandemic. Individuals still do need to certify every week that they are able and available to work, but they're unemployed or underemployed due to one of those qualifying reasons in the previous slide. I'm going to skip over here a second. The WorkShare program, if you're not familiar with this, this is an incentive to keep employees employed. So if you have a department of, say, 10 individuals, as opposed to having to lay 5 of them off, what this really encourages is to just reduce the hours for all 10 employees in that unit, anywhere from a reduction of hours in from 15% to 45%. And you can apply, you can submit your WorkShare plan to UIA. Once it's approved, those individuals will still receive unemployment benefits. And from what we are told, they will also be eligible for the $600 payment as well. The state was really waiting on guidelines and the green light to go ahead with that from the USDOL, but we do anticipate that employees on a WorkShare program will also be receiving the $600 per week on top of the state benefits. So this is really a win-win for both the employers. They can keep their employees on staff. The employees will be making more than somebody that may be receiving the max benefits allowable for under the state unemployment insurance benefits, which is $362 a week. So some additional guidance from the UIA. It's good to note that the UI tax rate will not increase for an employer if a company or a unit within the company is required to close its operations due to an executive order that was issued. The UI compensation is available in addition to those that are eligible also for individuals that may have exhausted benefits. What we often hear is, what if I need to temporarily lay off employees due to a slowdown of business that they do not think is directly linked to COVID-19? And the UIA is really encouraging employers to place their employees on temporary leave and advise those workers that they expect to have work available within 120 days as opposed to termination. So there's no additional cost to employers for doing that, and the employees do remain eligible for benefits through the state as well as those federal dollars in addition. Okay, so if you are an employer and you are faced with potentially putting an employee on a temporary unpaid leave, UIA has issued some guidance on the steps that you should take. So again, they're really encouraging employers to not terminate an employee, to have that stipulation that you are putting them on a temporary layoff. Having an expected return to work date that's within 120 days of the layoff date. Don't create a contractual obligation to bring the employee back to work. Let the employee know that the situation is changing and that date is subject to change. Also providing the employee with a formal form 1711, which is available on UIA's website. And the employers will need to provide the employee with their employer account number and their FEIN number as well. It's also important, the UIA encourages you to communicate to the employee about their rights, what their rights are under the governor's executive order once they're placed on leave, as well as if they're unable to work due to any of those qualifying reasons. In addition, employers are provided information on how to obtain, they're provided information on how to obtain unemployment insurance benefits. There is a fact sheet that is on UIA's website for employees. Make sure that UIA also gets both the employers up-to-date information and the employees. Let the employees know you'll be putting updated information on the website or internet if available so that they can check back with the company to see if there is anything new, continue that communication with them. Let them know there's a single point of contact if they have any questions following that layoff. Another question we also get asked quite frequently is, I have an essential worker that is refusing to come to work. So some employers have had to lay off all or some of their employees, and they have retooled. They now have work that is considered essential. They are asking some employees to come back to work, and employees are scared. They want to stay home and they're not going back to work. So employers are asking, what can we do? So it is a really sticky situation. The employer does still have the right to appeal UI benefits per the governor's executive order, which was 2020-24. Some common best practices to try to mitigate some of that is the communication to the employees. So telling them why your company's work is considered essential, so they understand that, detail that out. What is the company doing to take precautions to keep employees safe? So the more they know about that and that their safety is your #1 priority, the better they're going to feel about going into that environment. Clarify maybe any misunderstandings. So providing public health recommendations, and then how you are working to meet those safety standards. And then one-on-one with an employee there, a lot of employees, I think there are some individuals, in particular low-wage workers, that can potentially be making more if they are receiving the state's unemployment benefits and the federal benefits at $600 a week. That's a potential of up to $962 per week. However, they may lose benefits. They may lose, longevity at a company. And so what are some maybe potential leadership opportunities, or what is the cost of that loss of fringe benefits to that employee? So those are some, one-on-one conversations you can have with the employee. And then also if an employee is refusing to come to work, and you consider whether or not that employee is protected under any of those state or federal orders. And if they are not, and it is just simply, they just do not want to come in, verifying is that employee voluntarily quitting, of course, referring to your internal policies for disciplinary actions or termination, and having those one-on-one conversations with the employee. There are a variety of different ways that you can contact UIA. I have listed all of these. There's particular numbers for support if you have trouble getting into your MyWAM account through UIA. There's toolkits available. Again, I'm happy to share this. More information on the WorkShare program, and then some contact information just for general questions. And then we also, West Michigan Works has a team of business solutions professionals that are happy to answer any questions you might have.
All right, thank you, Amy, for that. We will move on now to our question and answer segment. If you could unshare your screen, we will move on to that. Our first question I'll start off with. This goes out to both of you. I'm not sure which one would answer, but in regards to unemployment in the CARES Act, is there any information out there regarding someone being the owner of multiple businesses? This person is a 50-50 owner in one S-Corp business and the sole proprietor of a home-based business. Both businesses are temporarily closed. Both businesses are making zero money right now and for the foreseeable future. Are they able to only collect unemployment under one of the businesses or both? And are they able to collect SBA grant loans for only one business or both?
I can answer on the unemployment part. So unemployment really looks at the entire work history over the last 18 months. So they will consider income that came in from all facets of employment. So yes, you can still receive unemployment benefits. They'll look at the total amount of wages that you earned over that time period, and we'll make a determination from there.
In terms of that grant, I'm assuming they mean for the disaster loan advance. They can apply for each business. The only thing I'm waiting on is some clarification is if you get a PPP loan as well, if you have to include both businesses within that, because they make you, they have you disclose all your affiliated businesses. So wait until they find determination on that, if you have to include that in your loan forgiveness as well.
Okay, we have a message in the chat from Katie. If someone was already on unemployment on February 15, are they still eligible for the additional $600? They may hire many seasonal ag workers, and the up to $960 per week will be hard to compete with for seasonal ag jobs.
That is possible that they may be eligible for that $600. It's hard to say a firm yes or no, because there's a lot of variables that are considered in determining the eligibility for an individual. But it could go back to February 15th, yes. Part of it is, I'm not sure if you'll be hiring them soon, or if it'll be a partial employment. But I guess my short answer is yes, they may be eligible for $600.
Okay, thank you. We have another message. This one's from Jody. Can you explain how or when independent contractors or self-employed people can apply, as the current application does not allow for you to choose self-employed?
I'm sorry, can you repeat that?
This one I think is for Amy. It says, can you explain how or when independent contractors or the self-employed people can apply, as the current application does not allow for them to choose unemployed or self-employed?
Okay, sure. So The state's unemployment agency was waiting for further guidance from the USDOL, which they did just provide to them over the weekend. So I would anticipate, my fingers are crossed, that they will have guidance and application instructions out within the next week. The best thing to do is to check UIA's website daily, maybe the beginning of the day and the end of the day over the next week, as they will be posting updates for the application process on their website.
Okay, I have another question. How does the $600 affect those received a portion of unemployment due to underemployment?
The $600 payment is a set payment. So if they are eligible, whether they are partially unemployed or fully unemployed, that payment is it's set. So if they fall under those eligibility guidelines to receive the $600, they will get it whether they are working some or not at all. Hopefully that answered the question.
Okay, we have two more questions. We're just over 9:30, so we'll do these last two. Well, this one's from Brenda. We have laid off most of our employees. Can we call them back sporadically for sporadic essential work, or will this mess up their unemployment?
Yes, you can call them back for sporadic work. It is not supposed to mess up their unemployment. So they would still need to certify every week, but they would claim those hours that they did work. So if they worked enough, if they worked full-time one week, they would not get their state benefits for that week. But they should be able to still certify every week, claiming any hours that they did work, and it should not cause any interruption with their unemployment.
Okay, and our last question, this is from Dakota. Is the PPP an option for the self-employed?
Yes, the PPP is an option for the self-employed. We do know that come April 10th, they're going to allow applications to be submitted come April 10th for the self-employed individuals. What I am waiting on is more guidance on how the loan forgiveness will work with self-employed individuals, because in difference of with wages, you know how much you've actually paid over a period, where with the self-employed individual, they're taking your, for example, your Schedule C income for 2019, and that's how you determine the loan. So we're trying to figure out, well, how do you get the loan forgiveness when you're really not paying yourself out a wage per se, because you're a self-employed individual. So we're waiting on some guidance on that and what that looks like. But as of right now, you can apply for the PPP for self-employed come April 10th.
All right, thank you. I'd like to thank everyone for attending our virtual meeting today. Make sure to check out our first virtual STIR meeting, STIR event that's happening tomorrow at 4:30 to 5:30. The link is actually in the chat feature right now. I'd like to thank our sponsors, Shepherd Shoreline Gutter and Garage Doors, for this meeting. And a special thank you to Jarred and Amy for joining us today. I hope everyone has a great day, and thank you for joining us this morning.
Thanks, everyone.
Thank you.
Thank you.